Good morning, folks, and welcome back to Almus Market Mornings. So, after the trade deal related updates yesterday, we are observing a few trends emerging, including dollar strength. Yesterday, dollar index rallied by just over 1%, and it wasn't just against the currencies. We saw gold also come off by over 0.5% against the dollar. Domestically, rupee weakened in yesterday's trading, closing just below 86.70 during the onshore trade. Even equities posted some losses, and now with the dollar strength coming back, I imagine the sentiment for the rupee will remain weak. Good morning, JK. Strong single day performance for the dollar yesterday. What levels are you watching for the dollar index and your take on the rupees moves as well, please?
Good morning, Swaraj. So on a day when uh, we had dollar making headlines for a change, and of course the equities globally were subdued, and even the yields have been in a narrower range ahead of particularly the Fed meeting and a host of important data that is due this week. Uh, Dollar's performance, I would put it to suddenly market realizing an improvement in the sentiment led by better data, and also even the asset market performing very well in the US. And there is a significant short covering that is having been taken on ahead of a bevy of important economic data and events. In fact, from an extreme situation where dollar was getting sold across the board, we are now seeing some sort of realization by the global players that things are not as bad as they imagined them to be. Data has not been bad. Asset markets in US have performed very well, and market has gone short in the dollar. And data shows that there is a net increase in the treasury purchases by the global players. So I think uneasiness about holding too much short dollars has now played into the market. In fact, what we are seeing is that the domestic players in the US have had a lot of confidence, exhibited a lot of confidence in the face of major policy headwinds, not so bad economic data, and calmness with which the trade deals with major nations have been received, particularly for the US economy, is now leading global players to relook at their strategy of selling dollars. So that's leading. And of course, as far as the euro is concerned, there is a kind of skepticism with which the deal has been received by major nations like France and Germany, because the tariff is at the higher end of 15% of the expectations. So euro has actually failed to cross the previous high, leading to a sell-off. We are probably in a situation where all the good developments in Europe have been discounted, while negativism about US have also been overplayed. So that is translated into a dollar strength. And of course, euro being the the benchmark for the dollar strength or weakness. Now we are also seeing other currencies following that trend. Yeah, not to say that dollar was not moving against other currency. Dollar was also getting sold off against other currency. That's why you are seeing the GBP, the yen, even the strong currency like Swiss franc has given up the gains yesterday. And as I said, gold once again having faced resistance about 3,400 is now again trying to break the 3,300 support. And we have also a bevy of the treasury issuances coming up this month, almost 183 billion of issuances, including long term and the short-term treasury bills. In fact, Treasury has announced that they are going to borrow 1 trillion for quarter three, which is earlier than what they had expected. There's also a statement from President Trump that he would shorten his timeline on Russia to reach a truce with Ukraine. Maybe next 10 to 12 days deadline is what he is indicating. And the expectation is that if these it does not materialize, there could be fresh sanctions, and that's also leading to some sort of a safe haven buying in the dollar. So all in all, dollar is making headlines now with its recovery. Of course, moves may not keep up this pace ahead of the key events that we have been talking about, particularly the Fed meeting tomorrow, and the non-farm payroll report on Friday. As far as India is concerned, not much support for the rupee, although the move has been somewhat muted compared to the dollar index. The industrial production in India also fell for the month of June by 0.1%, much lower than 1.5%, 1.9% it was recorded in May. Could be some base effect, but a lot of decline in the output of mining and electricity sector that was seen. Some marginal improvement in the manufacturing sector, but that could not make up for the big fall in the industrial production also. Impacting the rupee is the delay in signing of a trade deal with the US. President Trump has said on Monday that he will likely implement a blanket tariff between 15 and 20% on imports to the United Nations for all countries that have not negotiated a separate deal. That probably could be one that will apply to India as well. They're also expecting India to lower their own duties on exports from the US. So India is somewhat in position of slightly negative fallout from the trade deal as and when it is signed. But of course, we will see what the final print will be, and of course, the date of that also is very important. Whether it comes before August 1st, or whether we are subject to the minimum base tariff or not. We did have the stock market also in India continuing their uh, correction. Of course, this has been happening for a few weeks now as perception of overvaluation grows. We had more underwhelming corporate earnings report also yesterday. FIF flows was in excess of 6,000 crores, which is one of the largest in a single day. So the rupee weakness is not surprising to me. It broke 86.60 once again yesterday in offshore. It traded as high as 86.80, with the dollar index, in my view, gunning for another 1.5 to 2% gain. I think dollar rupee may test 86.90, which was the previous high, and the break could take us towards 87.20, 87.30 as well. We have to leave with some dollar strength for the time being, and rupee weakness also, until we start getting the flows, which doesn't look immediately on the anvil until markets correct themselves the excesses. So. I'm looking forward to the start of employment indicators today with JOLTS data and Fed meeting, followed by BOJ meeting day after tomorrow. Thank you.
Thank you, Jikan. I think the key summary is that the dollar trade, which seems dollar short trade, which seems a little crowded, seems to be showing some respite. Their economy isn't doing as bad as what was expected due to the tariffs and policy uncertainty. So dollar is seeing some basing and rally from its lows. When it comes to the European Union and the trade deal, they have signed. It received some skepticism from Germany and France. So that keeps the euro sentiment weaker. When it comes to the domestic markets, we are not seeing much support for the rupee. Even the industrial productions data for the month of June was lower, and the delay in signing the trade deal is also keeping markets nervous. One important thing is that Trump has recently mentioned that the blanket tariff would be between 15 to 20% for countries unable to strike a trade deal with the US by the August 1st deadline. So that would be closely watched where we fall in that bracket if we are not able to sign a trade deal. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.